Countries using the deduction method. Taxing residents. Deduction method. Countries using the deduction method tax their residents on their deduction method on their worldwide income and allow those taxpayers countries using the deduction method tax their residents on their worldwide income and allow those taxpayers to take a deduction for foreign tax paid in the computation of their taxable income. In effect, foreign taxes. Foreign taxes, income taxes, and other types of taxes are treated as costs or current expenses. Of doing business or earning income in the foreign jurisdiction. As noted above, the deduction method is the last generous method of granting relief from international double taxation. The deduction method was used by a number of countries in the formative years of their tax system when worldwide tax rates were low, and at that time it was an acceptable approach. As tax rates increased in the post World War II period, however, most countries adopt either the exemption method or the credit authorization. Only the exemption method and credit methods as methods for granting double taxation relief. However, the deduction method has not disappeared. Several countries that have adopted the credit method have retained the deduction method as an optional form of relief and a way of dealing with foreign taxes that for some reason do not qualify for the foreign tax credit. In addition, some countries use the deduction method for taxes paid with respect to income derived from foreign portfolio investments. In fact, countries use the deduction method whenever they tax residents on the amount of the dividends. They receive from a foreign corporation, assuming that the foreign corporation has paid some foreign income tax, and a foreign tax credit is not allowed with respect to that tax. In fact, countries use the deduction method whenever they tax residents on the amount of dividends they receive from a foreign corporation, assuming that the foreign corporation has paid some foreign income tax, and a foreign tax credit is not allowed with respect to that tax. For example, assume that AFCO, a foreign corporation, earns 100 of foreign income and pays foreign income tax of 20. FOCO pays its remaining after-tax income. FOCO pays its remaining after-tax income of 80 as dividends to its shareholders, including a dividend of 20 to R, a resident of country A who owns 25% of shares of AFCO. These facts, R has earned 25 foreign source income through AFCO, on which foreign income tax of 5. R has earned 25 of foreign source income through AFCO, on which foreign income tax of 5 has been paid. If country A taxes are on the on if country A taxes are on income of 20, it is in effect allowing R a deduction for the 5 of income tax that was paid to AFCO. A country that requires the associated tax to be added to dividends is said to gross up the dividends to approximate the before tax income out of which the dividends were paid. The purpose of a gross up rule is to provide equivalent treatment. The purpose of a gross up rule is provide equivalent treatment to taxpayers earning foreign income directly and taxpayers earning such income indirectly through a foreign corporation. A country that requires the associated tax to be added to dividends is said to gross up the dividends to approximate the before tax income out of which the dividends were paid. The purpose of a gross up rule is to provide equivalent treatment to taxpayers earning foreign income directly and taxpayers earning such income indirectly through a foreign corporation. See the discussion. Discussion. Discussion.
Discussion.
哎，我那黑遥控器呢？啊？你是调了是吧？啊，看见了。
Discussion.
Discussion. See the discussion of the indirect foreign tax credit. 间接的外国的The effect of the deduction method is that the residents earning foreign source income and paying foreign income taxes on that income are taxable at a higher combined tax rate than the rate applied to domestic source income. The effect of the deduction method is that residents earning foreign source income and paying foreign income taxes on that income are taxable at a higher combined tax rate than the rate applied to domestic source income. Foreign combined tax rate. Combined tax rate. Okay. As a result, the deduction method creates a bias. As a result, the deduction method creates a bias in favor of domestic income, domestic investment over foreign investment whenever the foreign investment is likely to be subject to foreign income tax. Bias creates a bias. Bias. As a result, the deduction method creates a bias in favor of domestic investment over foreign investment. Whenever the foreign investment is likely to be subject to foreign income tax. Thus, the deduction method is not neutral with respect to the allocation of resources between countries. Thus, the deduction method is not neutral with respect to the allocation of resources between countries. This treatment may be justified from the viewpoint of national self-interest. Not only is domestic investment encouraged, but residents with equal net worldwide income are treated similarly in that they will pay the same amount of domestic tax. The effect of the deduction method is that residents earning foreign source income and paying foreign income taxes on that income are taxable at a higher combined tax rate than the rate applied to the domestic source income. As a result, the deduction method creates a bias in favor of domestic investment over foreign investment whenever the foreign investment is likely to be subject to foreign income tax. Thus, the deduction method is not neutral. It's not neutral. Neutral. It's not neutral. It's not neutral with respect to the allocation. Of resources between countries. This treatment may be justified from the viewpoint of national self-interest. Not only is domestic investment encouraged, but residents with equal net worldwide income are treated similarly in that they will pay the same amount of domestic tax. Of course, from the perspective of the total. From the perspective of the total. Perspective. From the perspective of the total tax burden on a taxpayer's worldwide income, the deduction method does not achieve equal treatment of residents, combined domestic and foreign. Although residents with equal net worldwide income will pay the same amount of domestic tax, they may pay widely differing amounts of foreign tax. Although residents with equal net worldwide income will pay the same amount of domestic tax net income. Although residents with equal net worldwide income will pay the same amount of domestic tax. Okay. Exemption method. Exemption method. Exemption method. Under the exemption method, the country of residence taxes its residents on their domestic source income and exempts them from domestic tax on some or all of their foreign source income. Under the exemption method, the country of residence taxes its residents on their under the exemption method, the country of residence taxes its residents on their domestic source income and exempts them from domestic tax on some or all of their foreign source income. Under the exemption method, the country of residence taxes its residents. Under the exemption method, the country of residence taxes its residents on their domestic income, domestic source income, and exempts them from domestic tax on some or all of their foreign source income. In effect, the country of residence gives up its right to tax. Gives up its right to tax foreign source income, which consequently is taxable exclusively by the source country. The exemption method completely the exemption method completely eliminates residence source international double taxation, because only one jurisdiction, the source country, imposes tax on the income. Some countries, Hong Kong is a prominent example. Some countries, Hong Kong is a prominent example. Prominent example. Prominent example. 重要的. Some countries, Hong Kong is a prominent example, have adopted the exemption method with respect to most or all foreign source income earned by their residents. Most or all foreign source income earned by residents. In effect, these countries tax only income from domestic sources. For this reason, they are often said to tax on a territory basis rather than worldwide basis source. For this reason, they are often set to tax on the territory basis rather than worldwide basis. For most countries using the exemption method, however, the exemption of foreign source income is limited. However, the exemption of foreign source income is limited to certain types of income, most commonly business income earned in foreign countries and dividends from foreign affiliates. Affiliates. Foreign affiliates. The exemption method is sometimes restricted to income that has been subject to tax or subject to a minimum rate of tax by the foreign country. Further, the exemption method is sometimes restricted to income that has been subject to tax or subject to minimum rate of tax by the foreign country. Although foreign source income may be exempt from residence country tax by countries, using the exemption method, the income may be taken into account in determining the rate of tax applicable to the taxpayer's other taxable income. Although foreign source income may be exempt from residence. Although foreign source income may be exempt from residence country tax by countries using the exemption method, the income may be taken into account in determining the rate of tax applicable to the taxpayer's other taxable income. This practice is referred to as exemption with progression. In such system, the foreign source income is included in income for the limited purpose of determining a taxpayer's average tax rate as if the foreign income were taxable. This average rate is then used to compute the actual tax due on the taxpayer's other non-exempt income. Several countries, including Belgium, Finland, Germany, and Netherlands, use exemption with progression method. Example: assume that country A levies tax at a rate of 20% on the first 10,000 of income and 40% on the income in excess of 10,000. Country A levies tax at a rate of 20% on the first 10,000 of income and 40% on the income in excess of 10,000. Levies tax 征收税。Levies. Assume that a country A levies tax at a rate of 20% on the first 10,000 of income and 40% on income in excess of 10,000. T, taxpayer resident in country A. Taxpayer resident in country A has 10,000 of domestic source income. Has a 10,000 of domestic source income from country A and 10,000 of exempt foreign source income. T would be pay a tax of two. The first 10,000 is 20%, which would be 2,000. Would pay tax of 2,000 under a regular exemption system. Under exemption with progression system, T must determine the average tax rate that would apply if his entire income of 20,000 were domestic source income. In this example, the average rate would be 30%. Divided by 20,000. Tax average the practical the actual tax rate. The tax payable to a country to country A would then be determined by applying the 30% average rate to the domestic source income of 10,000, resulting in tax payable of 3,000. 钱加上4000，是不是6000？是啥意思？不这么算的，不是。Second 40,000. 40% of income have access to, so access to just 10 or 40% levies a tax rate levies tax at a rate of 20% on the first 10,000 of income, and 40% of the income that excess 10,000 820. Under the exemption rate progression system, T must determine the average tax rate that would apply if its entire income of 20,000 were domestic source income. In this example, the average rate will be 30%. The tax payable to country A would then be determined by applying 30% average rate to domestic source income, blah blah, resulting in tax payable 这啥意思啊？a taxpayer resident in country A has 10,000 of domestic source income. 20 and 税率是去找它的税率吧，应该是10,000 average tax rate, or you have to use 40%.怎么算 average tax rate？ 算了一个 average tax rate， 30%， 换算到 30% average tax rate. Okay, to find out the average tax rate first. Alright. So the exemption method. Under an exemption method with progressive system. The exemption method is relatively simple for the tax authorities to administer and is effective in eliminating eliminating international double taxation. The exemption-based progression system is more complex because it requires the tax authorities to obtain information about the amount of foreign source income earned by resident taxpayers. Although the exemption method is widely used and is sanctioned by both of the OECD and UN model treaties, it is inconsistent with the tax policy objectives of fairness and economic efficiency. Section 5.
Sanctioned.
Although the exemption method is widely used and is sanctioned by both OECD and UN model treaties, it is inconsistent with the tax policy objectives of fairness and economic efficiency. To the extent that foreign taxes are lower than domestic taxes. To the extent that foreign taxes are lower than domestic taxes, resident taxpayers with exempt foreign source income are treated more favorably than the other residents. To the extent that foreign taxes are lower than domestic taxes, resident taxpayers with exempt foreign income are treated more favorably than other residents, other residents. Moreover, an exception system encourages taxpayers to invest abroad in countries with lower tax rates, especially in tax havens, and encourages them to divert domestic source income to such countries. For example, a taxpayer residing in an exemption country who earns interest on funds invested in that country has a strong incentive to move the funds to a foreign country that imposes low or no taxes on interest income. Its exemption method on the exemption method is progressive rate. 是不是这么讲的？ Exemption income may be taken into account to determine the rate of tax applicable to taxpayers' other taxable income. This practice is referred to as exemption-based progression. Exemption-based progression. Exemption-based progression. 它是高和同样的相同税率的话，这部分是，它是算了一个 average tax rate。average tax rate 如果把这部分转移一下，这边转移一下。Sometimes country levies a tax rate 20% on the first 1,000 income and 40% on incomes and excess. 我们算到7个 taxpayer in country has 10,000 of domestic source income. Some country has 10,000 excess. Country A and 10,000 exempt from TV would pay tax of 2,000, 10%, 10,000 under a regular exemption system. Under exemption with a progression system, T must determine the average tax rate that would apply if his entire income of 20,000 were domestic source income. In this example, the average tax rate would be 30%. The tax payable to country A would then be determined by applying the 30% average rate to the domestic source income of the $10,000, resulting in tax payable of 3,000. 40% of the tax excess of 10,000. The exemption method is relatively simple for tax authorities to administer and is effective in eliminating international double taxation. The exemption with progression system is more complex because it requires the tax authority to obtain information about the amount of foreign source income earned by the resident taxpayers. Although the exemption method is widely used and is sanctioned by both OECD and Euro treaties, it is inconsistent with the tax with the tax policy objectives of fairness and economic efficiency. To the extent that foreign taxes are lower than domestic taxes, resident taxpayers with exempt foreign source income are treated more favorably favorable, favorably than other residents. Moreover, an exemption system encourages resident taxpayers to invest abroad in countries with lower tax rates, especially in tax havens. Especially in tax havens. Although the exemption method is widely used and is sanctioned by both OECD and UN tax model treaties, it is inconsistent with the tax policy objectives of fairness and economic efficiency. To the extent that foreign taxes are lower than domestic taxes, taxpayers with exempt foreign source income are treated more favorably than the other residents. Moreover, an exemption system encourages resident taxpayers to invest abroad in countries with lower tax rates, especially in tax havens, and encourages them to divert domestic source income to such countries. For example, a taxpayer residing in an exemption country who earns interest on funds invested in that country has a strong incentive to move the funds to a foreign country that imposes low or no taxes on interest income. For example, a taxpayer residing in an exemption country who earns interest on funds invested in that country has a strong incentive to move the funds to a foreign country that imposes low or no taxes on interest income. Because of these deficiencies, as noted above, the application of the exemption method for relieving double taxation to all foreign source income, which is equivalent to taxing on a territory basis, is difficult to justify and is used by only a few countries. The exemption method can be justified if it is used as a convention and simple proxy for the credit method, or is limited to certain types of income. For example, a country might exempt resident taxpayers on income derived from foreign countries that impose tax at rates and under conditions that are roughly comparable to its own rates and conditions. If such an exemption system is properly enforced, the results are similar to those obtained under a credit system, because in such circumstances, a country using the credit method would collect little or no tax with respect to any foreign source income that is subject to foreign tax comparable to the residence country's tax. This point is illustrated in the following example. Because of these deficiencies are noted above, the application of the exemption method for relieving double taxation to all foreign source income, which is equivalent to taxing on a territory basis, is difficult to justify and is used by only a few countries. The exemption method can be justified. The exemption method can be justified if it is used as convenient, and simple proxy for the credit method. A simple proxy for the credit method is limited to certain types of income. For example, a country might exempt resident taxpayers on income derived from foreign countries that impose tax at rates and under conditions that are roughly comparable to its own rates and conditions. If such an exemption system is properly enforced, the results are similarly to those obtained under a credit system, because in such circumstances, a country using the credit method would collect little or no tax with respect to any foreign source income that is subject to foreign tax, comparable to the residence country's tax. This point is illustrated in the following example. ACO is a resident in country A. ACO is a resident in country A, which levies income tax at a rate of 30%. ACO earns income of $1,000 in each of country B and country C, which levy tax at a rate of 40 and 50%, respectively.
Respectively.
Country A has a foreign tax credit. Country A has a foreign tax credit system to relieve international double taxation. Consequently, the credits你是摆烂了？
什么？
没事，我问一下你。
我没有完全摆烂，
Consequently.
我就再摆一会儿就开始干活了。
Consequently, the credits for taxes. Consequently, the credits for taxes paid to country B and C, 400, 500 respectively, will completely offset country A's tax of 800 equals total foreign source income of 2,000. Which levies an income tax rate of 40%. ACO earns income 10,000 in each of country B and country C, which levies a tax rate of 40 and 50%. So $2,000 at 40% tax rate, which is 800. So consequently, the credits for taxes paid to country B and C, 400 and 500 respectively, will completely offset country A's tax of 800 on ACO's total foreign source income of 2,000. Country A will collect tax from ACO after allowing the credit for foreign taxes only if country A's effective foreign tax rate is less than the effective tax rate of country A. Country A will collect tax from ACO after allowing the credit for foreign taxes only if ACO's effective foreign tax rate is less than the effective tax rate of country A. Of course, in the exception above, the effective foreign tax rate may be lower than the country A's rate, even if Country B and country C generally impose substantial taxes on foreign corporations. Of course, in the example above, the effective foreign tax rate may be lower than the country A rate, even if country B and country C generally impose substantial taxes on foreign corporations. Okay. For example, one or both countries may offer some special tax incentives, or their tax laws may contain some loopholes that foreign corporations are able to exploit. In such circumstances, country A might collect some tax revenue. Country A may collect some tax revenue from ACO in respect of its foreign source income. The effective foreign tax rate may be lower than country that generally substantial taxes. Impose substantial taxes. Substantial. Country generally imposes substantial taxes on foreign corporations. For example, one or both countries may offer some special tax incentives, or their tax laws may contain some loopholes. That foreign corporations are able to exploit. Loopholes. Exploit. Exploit. In such circumstances, country A might collect on some tax revenues from country. Exploit.
To lessen those tensions and to lift up voices that are less prone to exploit those sectarian divides. But we're not going to eliminate that stuff overnight. The trend.
But the irony is that the germs exploit those same qualities.
The germ exploit.
Was to support the infantry and exploit weak points in enemy.
Infantry. Was to support the infantry and exploit weak points in enemy positions.
A perfect.
In that situation,
people have an incentive to overexploit that resource.
Overexploit that resource.
In that situation, people have an incentive to overexploit that resource.
Overexploit that resource. Several countries use the exemption method for active business income earned by resident corporations through a foreign branch or permanent establishment, and for certain dividends received from foreign corporations in which resident corporations have a minimum ownership interest, usually 5 or 10%. This exception for dividends is often referred to as participation exception and is discussed more detail in section 4. Several countries use the exemption method for active business income earned by resident corporations through a foreign branch or permanent establishment, and for certain dividends received from foreign corporations in which resident corporations have a minimum ownership interest, usually 5 or 10%. This exemption for dividends is often referred to as a participation exemption and is discussed in more detail in section 4 below.80。
不吃了，
谁呀？
我
是多。
我吃的多还是你吃的多，你自己有逼数。
能吃能喝能造人。
到底谁吃的多，你心里清楚。
fuck。哎呀，有点烦，有点烦，有点烦。整啥呢？这么认真上班？
神经啊！刚摆烂了1个小时。
几点了
3点。
？3点了。今天妈估计看不完了这章。奶奶个腿儿的。Some countries use the exemption method for calculating business income earned by resident corporations through a foreign branch from permanent establishment, and for certain dividends received from foreign corporations, in which resident corporations have minimum ownership interest, usually 5 to 5 or 10%. This exemption for dividends is often referred to as participation exemption, and is discussed in more details in section below. The alleged virtue of the exemption method. 声望名声吧，应该是 virtue。virtue， 美德。The alleged virtue of the virtue of the exemption method. The exemption method for relieving international double taxation is simplicity. It minimize compliance costs for taxpayers and administrative costs for tax authorities. An exemption system can be justified as a proxy for foreign tax credit. Proxy for 什么 ？A proxy for an exemption system can be justified as a proxy for a foreign tax credit where foreign taxes as a proxy for foreign tax credit where foreign taxes are roughly comparable to resident country taxes. However, where foreign taxes are significantly lower than the resident country taxes, significantly lower than residence country taxes. Exemption is usually justified. Exemption is usually justified on the basis of international competitiveness and capital import neutrality. 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 The alleged virtue of the exemption method for relieving international double taxation is its simplicity. It minimizes compliance costs for taxpayers and administrative costs for tax authorities. An exemption system can be justified as a proxy for a foreign tax credit where foreign taxes are roughly comparable to residence country taxes. However, where foreign taxes are significantly lower than residence country taxes. Exemption is usually justified on the basis of international competitiveness and capital import neutrality. Based on international competitiveness, where foreign taxes are significantly lower than residence country taxes. Exemption is usually justified on basis of international competitiveness and capital import neutrality. Capital import neutrality. If corporations resident in country A are not taxable on their business income earned in country B or on dividends received from a subsidiary resident and carrying on business in country B. Hey Siri, 关闭空调. As other corporations resident in country B or elsewhere doing business in country B. If corporations resident in country A are not taxable on their business income earned in country B or dividends received from a subsidiary resident and carrying on business in country B, those corporations will pay the same tax on their income earned from country B as other corporations resident in country B or elsewhere doing business in country B. 哎呦我的妈呀！
你这样读会比较容易读得进去。
废话。
你啥语气啊？
不是，那你觉得怎么才能读进去？你觉得怎么才能看懂一个书？
我就是在问你啊，因为我平时看我不喜欢读，所以我在问你啊。
不是，你不喜欢读，你能看懂不？如果全新的东西。
全新的东西，我觉得我直接就是看着比读出来更容易看进去。
不是，你这主要是能不能看懂，不是说看不看进去。
看不看得懂？我如果看不懂，我就算读出来也看不懂。那我如果看得懂，我觉得我不出声读。
费曼学习法你知道吗？
是吗？
费曼学习法。
不知道。
就是说，你想真正学习，你需要把这个东西用自己的话去讲给别人，去教给别人。
那你也不是用自己的话。
我教给我自己啊。
那你也不是用自己的话。
就是你得自己教给自己，这样你才能懂快，知道吗？用不用自己话倒其次。
那你可那是瞎引用，那不是一回事儿。
就是费曼学习法啊，你搜一下嘛。
那用自己的话讲出来，那是在讲出来，人家说了，你看懂你学会的东西，如果你能再用自己的话讲出来是可以的，是证明你学透了，那是另一种事儿。你纯看人家读，这跟
对啊，自己教给自己啊，自己教自己啊。
他讲出来是啥？讲出来是自己在讲这回事儿，就像你读完了以后，你再去跟我说。
我都能说一遍，我还跟你说还不轻松吗？我自己都给教自己一遍了，自己说服自己。学习就是自己说服自己的过程。
你别装了。
不是吗？
不是，你就是读了一下，你就是看的时候读出声来了，这个叫自己给自己讲一遍。
对啊，自己说服自己啊。
哎，我不想跟你讨论这个你非觉得是就是。
那为啥我学东西比一般人快呢？就是因为用了费曼学习法呀。
谁比谁快了？你非跟那些智商比你低的人比。
你看看，人家智商不低，只是说他没用这个费曼学习法。
哎，别搁那废话了，爱咋咋。
那你刚才质疑我？
我质疑你啥了？我在问你，你瞧瞧你，说一句就搁那儿说别人质疑你，你是多不那啥，多不自信啊！问一句就说人家质疑你了。
好，没质疑。
真逗。
说呗，没什么，不至于算了呗。Although exemption system for foreign source income is relatively easy for tax authorities to administer, it requires rigorous source of income and expense rules. Rigorous. It requires rigorous.
Rigorous.
Rigorous. It requires rigorous. 严厉的. It requires rigorous source of income and expense rules. It also requires anti-avoidance rules to prevent taxpayer from diverting domestic source income to foreign source income in order to take advantage of the exemption. Finally, it requires expenses allocation rules. Finally, it requires expense allocation rules or anti-avoidance rules to prevent taxpayers from deducting expenses incurred to earn. Shall
我妈，这家伙，
你接了是？
我接，我在这儿咋接啊？视频。
视频啊，视频那就没法接了。那个微信回过去就行。有鬼！
啊？
语音给回过去啊。
我语音回过去干嘛？人家跟我视频。
那看找你干啥呢？
关键是跟我侄子视频。想。
有问题。
谁有问题啊？你别在这找我烦了，神经病吧！我有问题，行了吧？神经病。真是无语，平白给别人听懂。
谁添堵啊？你妈给你打电话，还是我给你打电话？
那你搁这说啥有鬼？你这不是有病吗？你不就添堵吗？
开个玩笑，这是。
神经病，一点不好笑。
Although an exemption system for foreign source income is relatively easy for the tax authorities to administrators. Although an exemption system for foreign source income is relatively easy for the tax authorities to administer. It requires rigorous source of income and expense rules. It also requires anti-avoidance rules to prevent taxpayers from diverting domestic source income to foreign source income in order to take advantage of the exemption. Finally, it requires expense allocation. It requires expense allocation rules. It requires expense allocation rules or anti-avoidance rules to prevent taxpayers from deducting expenses incurred to earn exempt foreign source income against their domestic income. Finally, it requires expenses allocation rules or anti-avoidance rules to prevent taxpayers from deducting expenses incurred to exempt foreign source income against their domestic income. One often overlooked weakness of an exemption system is likely impact on the shifting of tax burdens from an income earner to the payer in some circumstances. Assume, for example, that country A, which has a corporate tax of 30%, provides an exemption for foreign source income. Country B imposes a withholding tax of 20% on interest payments made to non-residents. A resident of a country A makes a loan of 100,000 to BCO, a resident of a country B. If ACO can earn 10,000 of interest free of 10,000 of interest, 10,000 of interest for free of tax by loaning money to a resident of country C instead of country B, ACO is likely to demand that it receives annual payments from BCO of 10,000 net of country B's withholding tax. Therefore, BCO would be required to gross up its payments to ACO so that ACO ends up with 10,000 after country B's 20% of withholding tax. The effect of this argument is that the burden of the withholding tax 2,000 imposed by country B on the payment to country A is borne by country B. This economic effect would be avoided if country A used the credit method. In that case, ACO would pay taxes of 3,000 on the interest of 10,000 wherever it earns that interest income. ACO would have no leverage to shift country B's withholding tax to BCO because it would have no opportunity for earning 10,000 free of tax, and country B's withholding tax would be credible against ACO's tax payable to country A. One often overlooked weakness of an exemption system is likely impact on the shifting of tax burdens from an income earner to the payer, from an income earner to the payer in some circumstances. 咋找一个啊 circumstances. Assume, for example, that a country A which has a corporate tax of 30 corporate tax rate of 30%, provides an exemption for foreign source income. Country B imposes a withholding tax of 20% on interest payments. Country B imposes a withholding tax of 20% on interest payments made to non-residents. Country B imposes a withholding tax to 20% on interest payments made to non-residents. ACO, a resident of country A, makes a loan of 100,000 to BCO, a resident of country B. If ACO can earn $10,000 of interest free of tax by loaning money to a resident of a country C instead of country B, ACO is likely to demand that it receive annual payments of BCO of 10,000 net of country B's withholding tax. Therefore, BCO will be required to gross up its payments to ACO so that ACO ends up with 10,000 after country B's 20% withholding tax. The effect of its arrangement is that the burden of the withholding tax 2000 imposed by country B on the payment to ACO is borne by country to BCO. 抓一个啥？
就是跟我侄子聊天儿，侄子搁这儿给我发语音呢。
Withholding the effect of this arrangement and the burden the economic this economic effect would be avoided if country A uses if country A used the credit method. In that case, ACO would pay tax of 3,000 on interest of 10,000. Wherever it earns that it earns that interest income, ACO would have no leverage to shift country B's withholding tax to BCO because it would have no opportunity for free tax to country B's withholding tax would be credible against ACO's suppliers. Participation exemption. Participation exemption. 哎，真他妈傻逼，真的难。公司的这些我是真不想看，真他妈难。Credit method，给我接点水呗，宝子。太渴了。这是Pad电都给你充好了，还不给我接水，能对吗？
给我充好了，也不是你做的最好的时候。
啥意思？
做的最好的时候，你也做的远不止于此。
这不是我现在得看书吗？养老规划师，我的妈呀！还有这个。Credit method. Under the credit method, foreign taxes paid by a resident taxpayer on foreign source income generally reduce. 你今天晚上不开会了吧？啊？
干嘛？
不是要剪头发去吗？正好剪完了，你直接就洗头就行了，对不对？都晚上都睡觉，都不用洗头了。
我是要洗头，只是说。
哎呀，你得了吧你！
你有病吧？我本来昨天晚上要洗，昨天晚上实在懒得洗了，今天肯定要洗的，因为本来
哎
昨天晚上。
呀，别洗了，剪头发去一块儿洗了不就完了？ 宝心想，哎呀，这太好了，又省个息。
有病啊！
宝心想，我操，这他妈太爽了，有人吹头发，有人给洗。
你有病啊！我这衣服刚换了，有点儿，
哎呀，无所谓，他这不是有罩子吗？你给你罩一下
你又
不是？
没掉头发渣了。
哎呀，无所谓，你那啥一下，抖一抖。
抖你的头，这抖得掉吗？
快点没事儿。
而且我在想，我每次剪头发，我都会戴那个隐形眼镜，要不然我还会剪塌了，然后我就看不清楚。
不是你戴你这眼镜不行吗？
除非你帮我看。
不是你戴你这眼镜不行吗？
不是我剪的时候又不会戴眼镜。
为啥？
谁剪的时候怎么戴眼镜啊？你戴眼镜人家怎么剪啊？
那我不懂，我没有戴过眼镜儿，咱哪懂这个呀？
对啊，你就不懂。回头他给我剪丑了，我就难过了。那你帮我看着。
可以。不对，应该你剪得快呀，我怎么帮你看啊？
啊？
你剪得快，我剪得慢。
谁剪得快，谁剪得慢呀，哥？
我的快，你的慢啊。
我并不这么觉得。
女生剪头发不挺慢的吗？
哦，你的快，哦，你刚刚不是说你的慢吗？
我说我的快，你他妈这耳朵真的不行。
哎呀，我就说嘛，女的剪得慢得很，还要分好几层，除非你去那种垃圾的那种，他就会给你。
不是你到底去哪儿啊？不是说去那什么吗？
就去把你的余额用了呀。
对啊，还去上次那店吗？
早知道我从家带个隐形眼镜过来，我今天出门时候想带来着，我想着这2、3天没准儿咱们会去剪一次头，然后我就给忘了。
Under the credit method
那你帮我看着点儿。
可以。Under
我
the
现在没，你听我说，你知道为啥那什么吗？我们以前初中的时候，女生要求留短头发的，知道吗？然后加上那会儿有刘海儿，就你要是不盯着点儿吧，很容易一下子给你剪呲溜，跟男的似的。
行，那你不要说100年前你的事儿了。你现在你都上班上了多少年了？上他妈5、6年了。
不是，那也容易，如果
上5、
就是
6年，上7、8年了。
不是，那也会看不清楚，万一他给我剪丑了呢？
还怀念你大学、高中的时候。
有病吧？谁怀念了？我说他给我剪丑了。我只是跟你讲最倒霉的时候，就是那个时候。
Under the credit method, foreign taxes paid.
自己剪了，我不想跟你说，就你这人说话真多余。
开玩笑，急什么劲儿？
急，我不给你倒水了，自己倒。
Under the credit method, foreign taxes paid by a resident taxpayer. Under the credit method, foreign taxes paid by a resident taxpayer on foreign source income generally reduce domestic taxes payable on that income by the amount of the foreign tax. Under the credit method, for foreign taxes paid by a resident taxpayer on foreign source income. Under the credit method, foreign taxes paid by a resident taxpayer on foreign source income generally reduce domestic taxes payable on that income by the amount of foreign tax. For example, if P pays foreign tax of 10 on an item of foreign source income and would otherwise be subject to domestic tax of 40 on that income, the foreign tax credit reduces the domestic tax payable from 40 to 30. Consequently, the credit method completely eliminates international double taxation of a residence source type. Under the credit method, foreign source income is subject to domestic tax whenever the foreign tax paid is less than the domestic tax payable. In such circumstances, the net domestic tax is amount equal to the foreign source. The net domestic tax is the amount equal to the foreign source income multiplied by the differences between the two tax rates in fact assuming 是我的邮箱还是你的邮箱？
什么箱？
是我的邮箱还是你的邮箱？刚听嘚儿一声，
离那么近听不清楚。
好像是我的邮箱收到邮件了。没事儿。In such circumstances, net domestic tax amount equal to the foreign source income multiplied by the differences between the two tax rates. In fact, assuming that the domestic tax rate is higher than the foreign tax rate, the foreign taxes are not topped up by domestic taxes, so that the combined domestic and foreign tax rate on the foreign source income is equal to the domestic tax rate. 哎呀，看不下去了，他妈的，打会儿游戏，
什么？
看不下去了，晚上继续看吧。
刚这给你倒了杯水，搁这开场上
还有几
游戏了。
页啊？数还有几页？
早知道不给你倒水了。
1页、2页、3页、4页、5页、6页、7页、还有7页。7页得花我3-4个小时，4个小时。晚上几点？晚上早点回来。4个小时能看完。哎，先歇会儿，太鸡巴累了，看我头了。我发现下午的效率是真低呀！我操。